Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimize Obiwa. We're coming on the program. More reactions continue to trail Nigeria's new forex market regime. And it's countdown to the EU referendum as Brexit campaign comes to a close today. Plus, Hong Kong overtakes Angolan capital Luanda as the world's most expensive city for expatriates. We'll begin in the U.S., where the Federal Reserve Chair Janet Yellen says global risks and a U.S. hiring slowdown warrant a cautious approach to raising interest rates as the Federal Reserve looks for confirmation that the country's economic recovery remains on track. In a prepared testimony before the Senate Banking Committee, Yellen outlined how the central bank was thrown off course within weeks of raising rates last December by a slowdown in domestic growth and international events, including concerns over China's economy and a further collapse in oil prices.
However, the pace of improvement in the labor market appears to have slowed more recently, suggesting that our cautious approach to adjusting monetary policy remains appropriate. Proceeding cautiously in raising the federal funds rate will allow us to keep the monetary support to economic growth in place while we assess whether growth is returning to a moderate pace, whether the labor market will strengthen further, and whether inflation will continue to make progress toward our 2% objective. One development that could shift investor sentiment is the upcoming referendum in the United Kingdom. A UK vote to exit the European Union could have significant economic repercussions. For all of these reasons, the committee is closely monitoring global economic and financial developments and their implications for domestic economic activity, labor markets, and inflation.
Janet Yellen, Federal Reserve Chair. Meanwhile, the European Central Bank President Mario Draghi says the ECB is ready to cope with all possible outcomes following this week's UK vote on EU membership. Britons will head to the polls on Thursday to decide whether to remain in the European Union.
Very difficult to foresee the impact to foresee the various dimensions in which a vote in the UK would impact on the markets and on the economies of the Eurozone. It would be difficult also to speculate about one outcome instead of another. And so let me just say that we are trying to be ready to cope with all possible contingencies. At this point, it would be very, very difficult to be more precise than that. I think we've done all the preparation that's necessary now.
Mario Draghi, ECB President. Well, it's countdown to the EU referendum. Let's cross over now to Frankfurt to see what's happening there. Olaf Krieger, DWTV Channels TV financial correspondent, joins me now. Good afternoon, Olaf. Well, tomorrow is the D-Day. Brexit campaign ends today. How's the market preparing for this day?
Well, everybody here at the Frankfurt stock market is highly alert, is desperately waiting how Europe will look like on Friday morning after the decision. This is the most important question here at the Frankfurt stock market all over Europe, I have to say, but currently global equities rose as well as the British pound, and even the oil price is slightly up. That's always a good sign. And also German top shares in the DAX are gaining today, and that's because apparently the Remain camp is getting the upper hand, is getting stronger and stronger, but many analysts are still warning because Britain, which is the world's 5th largest economy, would suffer a hard blow if the Brits vote to leave. And behind doors you can hear something like, "Don't stop a rolling stone. If the Brits want to leave, let them leave."
Well, now let's look at the foreign exchange market. What is the sentiment there?
Well, Jimmy, in the foreign exchange market, the pound is gaining on Wednesday, having a hit 5 months high on expectation that Britain will stay in the EU, and the single currencies, the euro, is also up. But we have to keep in mind the polls are still too close to call, because both camps, the Remain camp and the Brexit camp, are still neck to neck, and there are so many undecided voters in the UK, and Prime Minister David Cameron is hardly trying to get them, especially the younger voters, back on track. But the Brexit campaign is also very active and very ambitious to reach their target.
Now, Olaf, let me add this. From your own perspective, do you think the UK would stay or go?
I'm absolutely sure that the UK will stay in the European Union. But there is another question, because this whole Brexit debate shows that the European Union is in a bad condition, because so many citizens of the European Union, whether in Brussels, whether in London, in Paris or elsewhere in Europe, are complaining because so many decisions have made behind their backs, over their heads. So I think the European Union has urgently to reform itself to get more satisfied citizens in the European Union. And I think the EU has to do it quick, because this Brexit debate shows crystal clear that there is something wrong in this alliance.
Well, we have to wait till tomorrow to see what the result turns out to be. Now, let's look at VW issue. I understand the shareholders are meeting for the first time since the emissions scandal. That's going to be a rough ride for the management, am I right?
Well, the management, especially the CEO, Matthias Müller, has to face many angry and disappointed shareholders. Of course, this is crystal clear at the shareholder meeting took place currently in the city of Hanover, but also in Frankfurt and the Frankfurt stock market. There's a lot of disappointment because everyone is still waiting for answers. And the CEO pointed out that he's not willing to address any further question regarding this cheating channel that took place. And so they are very disappointed. And we have to keep in mind that Volkswagen lost a lot of money, almost 17 billion euros since the crisis broke out. And that means there's less money in the sideline just to create new strategies, new plans, such as going away from the diesel technology, moving more and more to reliable new energy and to e-mobility. So Volkswagen is not out of the wood.
Well, I guess this scandal has really taken a toll on Volkswagen. Well, thank you very much for your time, Olaf. Do enjoy the rest of the day. Olaf Krieger, DWTV, Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. Well, Hong Kong is the world's most expensive city for expatriates, leapfrogging Angolan capital Luanda in the annual chart compiled by consultancy firm Mercer. Luanda, which had consistently topped the list in recent years, fell in the ranking owing to the weakening of its local currency. Zurich and Singapore were third and fourth on the list, unchanged from a year ago. Tokyo rose to fifth. The survey is designed for companies to calculate expat workers' allowances. It weighs up the cost of living in 209 cities across the world, comparing the cost of more than 200 items in each location, including housing, transport, food, clothing, and entertainment. We'll take a quick break now, and when we return, more analysis on Nigeria's new FX policy. Do stay with us.